there's a relentless bid for investment into everything related to stablecoins and tokenization. Ryan and I have both been on the road recently. I've been in Chicago and New York this week. Next week, I'll be in London and Barcelona. Every TradFi investor that's looking at crypto, as interested as they are in Bitcoin, what they really want is a way to hop on the stablecoin and tokenization train. The primary ways they're doing that, there are three. One is ETH, the other is Solana, and the third is crypto equities.
GM, good morning. Welcome to the Meltdown Show, the daily crypto show where one Trump post moves the markets faster than the Fed ever could. Blink and you lose billions. I'm your host, Jay Hamilton. It's Friday, October the 10th. You might be wondering what the F is going on with markets this morning. Everything is red because Trump posted a massive paragraph about China saying there was a massive increase in tariffs coming. Is the trade war back on? Is this April all over again? Is October canceled? What does this mean for Bitcoin and ETH and Sol and the rest of crypto? We are going to break this all down with the Bitwise boys who are back in the studio. I'm talking about Ryan Rasmussen, the head of research at Bitwise, and Matt Hougan, the CIO. Today's episode is brought to you by Nexo, the platform that grows your crypto without locking it away. It's also brought to you by Figure Markets. Grow your cash like a bank. No lockups, just real returns. With that, Matt, welcome back to the show.
Thank you for having me. I'm so excited to be back.
Ryan, what's up, my man? Welcome back.
Great to be here again, Jay.
Always a pleasure to have you guys. Okay, let's start. I'll screen share and just give everybody the news here. So at 10:57 a.m. Eastern today, President Trump published a very long paragraph about China saying a massive increase in tariffs is coming. By 11 a.m. Eastern, 3 minutes later, the S&P 500 had already erased 700 billion of market cap. What's your guys' thoughts? What's your reaction?
Man, it's a $1 trillion tweet. That's a very expensive tweet. It's really remarkable. That negative God candle really just stands out there. I'm of two minds here, having read through it. The first is that for the last 9 months, we've learned that the right thing to do is to fade Trump's initial statement. He stakes out an extreme position and then historically has dialed it back. So my initial reaction to a move like this is that the market is probably overreacting. All that said, it's a really aggressive paragraph, right? It is talking about a fairly existential trade war. I'm not surprised people hit the panic button and sold everything off. I do not think, to go back to your intro, it interrupts October. I think as the market recalibrates, it will realize that Bitcoin is insulated from this and crypto is insulated from this, and maybe actually a hedge against this kind of craziness. But the market's going to freak out for a while. Everyone should take the time to read that tweet because it is a remarkable $1 trillion tweet, and it is pretty aggressively worded.
Brian, what's your thoughts?
Well, I'm just glad that today's payday, because this is a great opportunity, perhaps, to get some Bitcoin or other assets on cheap if you were looking to buy. Obviously, not financial advice, but I do agree with Matt that we've seen this pattern play out a number of times this year. And I think that every single time what you've seen is a massive reaction to a big statement. Then you've seen markets settle. And if you look back, those have been great opportunities to get into positions that you've been sitting on the sideline from or been wanting to add to, particularly in October. I mean, I think one thing that most people aren't talking about is that we actually had an Uptember last month. And that is a bit different than what we typically see in September and in the summer months. And so we're continuing that trend higher, we think, into the end of the year. And so an opportunity like this, of course, if it does end up being that, is a wonderful timing. But, we'll have to see how things shake out. I agree that it will probably see an overreaction from markets through the end of the day today, maybe even early next week. But I would imagine that things kind of calm down here on out.
Thank you for giving us a little bit of calm in moments of complete panic like this, which I'm sure many people, it's so funny how everybody lives in an echo chamber. And if you're in crypto Twitter, there was a lot of what the fuck is going on? Sorry for swearing. But, there was a real why is everything dumping? What's happening? And I think this is where everybody gets so emotional in moments like this, because we all for whether you want to admit it or not, everybody expects Q4 to be just a crazy euphoric bull run. Like I think that expectation is very dangerous. Let's shift to crypto for a second. So let's start with Bitcoin. You guys called, I don't remember when you made this call. I actually think it was a year or last December when we had you on the show and we did our predictions. And you guys called 200K Bitcoin by the end of this year. Is that still on? Is that still possible?
I think it's still possible. I'm not sure it's the base case. I think we rally hard in Q4. I think the setup is absolutely incredible. You have Wall Street rallying around the debasement trade as the most popular trade of the year. I think people are going to pile into that so they can show their clients at the end of the year that, yes, they saw this coming. They were in Bitcoin, they were in gold. So I think we're going to see strong flows there. I think you're seeing an acceleration of ETF flows. When we combine those two things, I think the price goes up substantially. We have deliberately not revised our forecast because we still think it is in play to get there. Whether we'll get all the way there or just directionally there, I'm not sure. I'd love to know Ryan's take, but I'm still optimistic that we'll end up north of 150 and maybe we'll get a run to 200K if everything lines up the way I think it might.
Yeah, I'm in line with that. I do think that we're seeing tremendous adoption by institutions and financial advisors. Of course, we've seen a bit of a slowdown in purchases by public corporations, but I think that demand kind of continues to swell, going into the end of this year. One thing that this big move today may end up doing is accelerating that push higher. Because if you take a step back and think about, most of the time what happens is Bitcoin hits an all-time high. You see a bunch of leverage built up in the system. And at some point, there's inevitably a flush of that leverage with a candle like the one that we just saw on the screen, but for Bitcoin. And I think likely if we look back in 18, 20 hours at the past day's liquidations, we're going to see a huge amount of Bitcoin longs being liquidated. So I actually think maybe this speed bump, or whatever you want to call it today, actually accelerates the flush of leverage out of the system, which is often healthy and helps push things higher. But I agree, none of the long-term signals are showing that we're going to see a down Q4 or a down 2026. There's just continued pent-up demand being released into the system, and we think that drives prices higher for the foreseeable future, even though there may be these speed bumps along the way, which is typical in bull markets. We've seen it many, many times before.
Yeah, and I just tossed in one more thing. It's not just crypto yahoos like Ryan and I that are saying we could see a melt up in Q4. JP Morgan is talking about 165K by the end of the year. Standard Chartered, a stuffy UK bank, is talking about 200K by the end of the year. People are doing that because they're looking at the imbalance between supply and demand and crunching the numbers, and that's what they're finding. But try to find me a stock that a major bank thinks is going to double in the next 3 months. Analysts don't put out those sorts of recommendations. The fact that they're doing it in Bitcoin suggests to me that it's not just Ryan and I being Bitcoin bulls. It's actually sort of a reading of the fundamentals that this is still something that could easily happen in this market.
So let's just talk quickly. Let's try to be as quick as we can because I do want to move on to other things. But I just want to talk about what would push us there. What would get us to 200K? So you have the debasement trade, as you said, Matt. You think that's probably the hottest trade on Wall Street right now? Everybody's
yes.
I see it's not just a crypto trade. That's a global. Everybody's in on that trade. Okay, so we have that. We have the. I think that if we hit 150, that would be a big moment to bring retail back. Is the gut feeling I have, which we're still sort of waiting on, and that could cause a lot of euphoria. What else would need to happen in order for us to have that push? Or is it just kind of you feel like everything is set up to do it and you don't really think there needs to be any major events to get us there?
I think we're on that track. It would help if we got a little bit more aggressive on the rate cut outlook, if it looked like the Fed was going to be more radical about letting the economy run hot while cutting rates. I think we could get that sort of signaling. It would help if we see more sovereign wealth funds allocate. But I think that debasement trade and the unlock of platforms like Morgan Stanley and Wells Fargo to buy Bitcoin and how that correlates to flows, I think that alone might be enough. But I do think if we start to see the Stephen Moran force driving down expectations for interest rates, I think that would be an extra catalyst, a cherry on top.
Ryan, anything to add there?
Yeah, I would just say that I actually think these tariff tantrum tweets from Trump that we've seen now, like 10 of these over the past 6 months, we're actually kind of like just over 6 months out from the original kind of tariff crash in, if you call it that, in April. And I think what happens each time is there's some desensitization that occurs. There's a little bit of a reset. But if you look back at those moments, once the dust settles, people then get even more optimistic about the future than they were before the tweet comes out or before the tariff shock occurs. So I actually think, there's this element of now everyone's like, oh no, what's going to happen once that dust settles, whether it's 1 week or 1 month from now, you all of a sudden get this like renewed risk on appetite, which could be fueled, as Matt mentioned, by additional interest rate cuts. And I think that is, something that pushes markets higher into Q4, into 2026. So 200K, maybe, more likely 150 or above. I think retail does start coming back in. I've gotten some text when we hit new all-time highs at the end of last week, earlier this week, but it wasn't quite the euphoria that we're used to seeing when retail enters the market, from my opinion. So I think that they still haven't entered the chat, but I think they will soon. I think the dust will settle and we'll see prices go higher next month, December, and so on.
I have this sneaky suspicion that you guys have a group chat called Crypto Yahoos, and it's just a bunch of you big institutional guys like getting everybody over to the Crypto Yahoo side. I just got a clip that you called yourself a Crypto Yahoo. I love that.
Great. Yeah, we can neither confirm nor deny the existence of that group chat. So,
okay, let's talk. Other than Bitcoin, let's talk what other crypto assets are well set up to perform in Q4? What, other than the debasement trade, what are the other trades that you guys are seeing that people like?
There's a relentless bid for investment into everything related to stablecoins and tokenization. Mm-hmm. Ryan and I have both been on the road recently. I've been in Chicago and New York this week. Next week, I'll be in London and Barcelona. Every TradFi investor that's looking at crypto, as interested as they are in Bitcoin, what they really want is a way to hop on the stablecoin and tokenization train. The primary ways they're doing that, there are three. One is ETH, the other is Solana, and the third is crypto equities. We're seeing a lot of inflows into our crypto equity ETP, but that train is leaving the station. I think the question there is whether the Clarity Act goes awry and doesn't make passage through Congress. If we do see sort of momentum on the Clarity Act reappear and rising expectations that it will get through Congress, I think that trade's going to absolutely explode, and we'll see much higher ETH and Solana prices and huge inflows into those ETPs. So that's the other big story in crypto, and it's just relentless and overwhelming from the TradFi side.
Yeah, I would just add to that. I was combing through some data yesterday as we prepare this quarterly report that Bitwise puts out every quarter on, a bunch of data across the crypto market. You can find it on our website or on our socials. And I was shocked to see that in Q3, all 9 of the assets outside of Bitcoin in the Bitwise 10 large cap crypto index outperformed Bitcoin in Q3. So yes, Bitcoin's had a remarkably strong year. We know Ethereum and we know Solana had a pretty strong Q3, but so did other assets like Chainlink, XRP, Avalanche, and so on. So I think there's this bid for what's next and where does that value accrue of tokenization and stablecoins? Where does the demand funnel once you have new ETPs, which we of course will have what Matt has deemed ET Palooza coming in the near months, thanks to the SEC's new rules. So I do think investors are kind of looking beyond Bitcoin for the first time in a while, and they're even looking beyond Ethereum, which I think is a new phenomenon that really has never happened in this market when you think about institutional investors, professional investors. And I know from our conversations this week on the road, we were being asked about XRP, Chainlink, and other crypto assets that typically we don't get asked about in these types of events.
You guys need that index ETP, because then everybody can get access to that full thing. What's the top 10 is what it's going to be. What is your ETP, your index going to be?
Yeah, so we've been running this fund as a private fund and then a sort of GBTC style trust for almost 8 years. It's the top 10 weighted by market cap, screening out things like meme coins and some controversial from a regulatory perspective coins like BNB. So it's a lot of Bitcoin, a lot of ETH, a lot of Solana, a lot of XRP, a lot of Chainlink. And we think there's going to be huge demand for that. For a crypto native investor, that seems like a very boring investment, because we all have our own fiefdoms and turfs. We're Solana or we're ETH. We like to fight about these things, but for a traditional investor, they index everything. They index stocks, they index bonds, they index real estate. Guess what? They're going to index crypto. So I do think that will get significant flows that will lift all assets if and when the US government reopens and then the SEC sees fit to allow our ETF to list. So we're really hopeful for that.
It certainly feels like the mistake that you could make right now as a crypto investor is being too maxi towards one chain. That could hurt you in the long run, because the truth is, I think you nailed it. Like, stablecoin and tokenization, that is the trade right now. And it's still too early to know which chain is going to win in the long run. Yes, there are clearly winners with Ethereum and Solana, but even between those two, it's difficult to know where it's going to go. And there's arguments to be made on both sides. So it feels like, I'm not saying everybody listening to this needs to go invest in an index, but I hope that your portfolio has reasonable allocation across, because I always find people who are like, yeah, I'm 100% Solana or 100% ETH. And I'm just like, are you really that convicted in one side versus the other? Like, you're here. Don't you know that both can win?
So true. Also, just think about how sad you will be if stablecoins dominate global payments and every stock and bond is tokenized, and you called it before 99.9% of the world, and then you bet on the wrong horse and ended up with nothing. It would just be a psychologically crushing position to do. Look, the scale of the market that stablecoins and tokenization is going after is so massive that even if you bought like the top 10 potential winners and only one of them won, which is not what I think there'll be multiple winners, but even in that scenario, you're going to do extraordinarily well. So I agree, we can all have our favorite child, but many people would do well to bet across them. I just think the risk of picking the wrong horse in this race is too large given the size of the prize at the end of the race.
Yeah, I just, to phrase it a little bit differently, like, the last thing that you want in 20 years is to be looking back and having to explain to your kids who are like, Dad, I saw I found some of your old tweets about like how big stablecoins and tokenization and crypto is going to become and how it was going to revolutionize every asset class and every market in the world. Like, why are we not living in a mansion and uber rich? And you're like, well, kids, I put all my eggs in this basket and it didn't work. I bought Napster or pets.com and I was wrong. And so I think like the diversified approach, as Matt mentioned, is what's used by most investors across every other asset class in the world. And I don't see any reason why crypto will be any different.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets.
If long meetings and judgmental bankers are your thing, Nexo's probably not. Nexo is a premier wealth platform built for people who value their time and money. It's built for people who have idle cash lying around and want it to grow fast. Whether it's Bitcoin, Ethereum, or even Forex-pegged assets like USDT or USDC, Nexo offers up to 14% annual interest and access to crypto-backed credit in under 24 hours. Your assets need a platform built for growth. Join Nexo.
Okay, that being said, I am going to make each of you pick an asset for Q4. Ryan, I don't know what yours is, but Matt, I already know yours because I've seen you talk about Solana's setup right now. So Matt, give us your take on why you think Solana's got such a great setup. And then Ryan, you can go next on what you think.
Yeah, I should first tell my ETH friends that I also am very optimistic on ETH. I think it's well positioned. It's the leader in stablecoin and tokenization AUM. But in 8 years of operating full-time in crypto, I've never quite seen a setup like the setup for Solana. The three things that I think are going to lift it substantially higher are you have this massive unrelenting interest in stablecoins and tokenization, and Solana has one of the best and most interesting solutions there. You have the rise of Solana digital asset treasuries with charismatic and well-spoken leaders like Kyle Samani, who will be on CNBC talking about Solana ad infinitum. And then you have the expectation that we're going to see a lot of ETFs launch. When we've had these things line up before, you had Bitcoin ETFs, Bitcoin DATs, and rising interest in fiat hedges, and the price tripled. You had Ethereum ETFs, Ethereum DATs, and rising interest in stable coins, and we're from 1,500 to 4,000 plus. And then you think about the fact that Solana is a tiny asset. It's 1/5 the size of ETH. It's 1/25 the size of Bitcoin. Just a little bit of flows into it because of those things I called out. There could be a real supply demand crunch there. And I think the price could double or triple in relatively short order as institutions make their first allocations into this space. Again, I've never seen a setup quite look like this.
Before you jump in, Ryan, I just need to give a media perspective here, because it is very interesting being in my seat of doing a daily show and seeing where the demand to be in media is coming from. And I can tell you that we had an incredible demand for Ethereum DATs. Every PR agency was reaching out to us all summer, and we did have a lot of Ethereum DAT shows, and they performed very well. It was what everyone wanted to listen to the most, and it was what wanted to be on the show. And now Kyle Samani's coming on the show next week or the week after. And now it's all of these other DATs. We just had David Scamus from Hyperliquid DAT on the show. I know you guys like Hype as well. So it's all these, and so I can see these things happening ahead of time, and you can't underestimate how much media does impact investors, because when everybody is seeing something, especially from somebody that's charismatic and good at telling a story, as Michael Saylor has been for Bitcoin and Tom Lee has been for Ethereum, and those next ones are coming for the other top tokens, especially Solana. I completely agree.
So true. We've seen this movie before, and it ends up winning the Oscar. Let's play this back. We get to play it back. I really just think it's phenomenal. So I love that perspective, Jay.
Ryan loved that line. Matt, you're always so good with the one-liners. That was a good one. Yeah, it's going to win the Oscar. Okay, Ryan, your Q4 token or asset that you like.
It was. I was just thinking as you guys were chatting, like how crazy would it be if I came out and I was like, it's the Melania token. Guys, that's my pick for Q4. But no, I agree with everything Matt said around Solana and Ethereum. I'll pick a different one though, because I do feel pretty strongly about this. I think Chainlink is extremely well positioned for this next leg up in both crypto asset prices, but also in just mainstream adoption. You're going to need the infrastructure to connect stablecoins and tokenization between the traditional finance world and the blockchain world. And there's really no other Oracle network or data provider, information provider, whatever you want to call it, Chainlink, that is as well known and as well positioned as they are for this boom. If you think about the fact that you're going to need some type of infrastructure to connect the dots between the price of the S&P 500 and the tokenized version of that trading on chain, that's going to be something like Chainlink. Or if you think about the fact that the New York Stock Exchange just invested $2 billion in Polymarket, well, guess what? Guess what network provides the information to Polymarket to allow them to settle those prediction markets when results of an election or a sporting event or some other world event takes place? Yes, there's other Oracle networks that do it like UMA, but also Chainlink is now part of that game. And I just think that there's not really any other crypto asset out there that has as much of a monopoly or market share in one sector, and that sector being so important of connecting the dots and all of the upcoming themes and all the upcoming trends like stable coins and tokenization as Chainlink is. So I think that that's one that I believe will do pretty well as the world continues to adopt crypto and crypto continues to go mainstream.
I want to come back to Matt. You said earlier, you mentioned the Clarity Act, and how concerned are you about the government shutdown and the Clarity Act maybe not going through this year? And then what happens? Does it get delayed even further? I mean, how big of a risk is this?
Yeah, the risk is I was 90% confident we were going to get it. And now I may be flirting with below 50 or around 50. The two reasons for that, you mentioned one, which is the government shutdown. They literally can't work on this because the doors are closed because the government's incompetent. And the second reason is we've seen the Democratic counterproposal in the Senate to the Republican bill in the Senate. And the Senate is where all the action is right now on the Clarity Act. And the Democratic proposal is a non-starter. It's aggressively anti-crypto. It feels like it was penned almost by Elizabeth Warren. And so there's not an easy path to reconcile the Republican version with the Democratic version. They're on two very opposite sides, and it looks a bit like the Democrats want to make this a difficult political issue. If it doesn't happen this year and we bleed into next year, it probably gets even harder. The way it's resolved, I think, is you're going to need lobbying pressure from crypto and lobbying pressure from the traditional finance industry to encourage those Democrats to move along. I'm probably still at like a 55% chance it gets through, but I do think it's a real risk to the market. If we see the Democrats digging their heels with their current approach, you could see expectations sour for this, and that would be bad for everything except for maybe Bitcoin and Ethereum. Everything beyond that, I think, would suffer from a regulatory perspective.
Okay, let's shift to ETP. What do you call ET-Palooza?
ET-Palooza, yeah, man.
ET-Palooza. Okay, so here's my big question about this. Everyone's talking about more ETPs, ETFs, ETPs, whatever you want to call them. They're coming. Everybody knows that they're coming. You know, the SEC has put out much better guidelines. We have we have standards from them for the first time. So like, there's no doubt that they're coming. The thing that I can't wrap my head around is I go back to Matt. I don't know if you remember. I think it was the first time we had you on the show, right when the Ethereum ETPs were about to launch, and we were all so excited about that. And then they just bombed and didn't get the flows. And I think I have PTSD from that. So is ET-Palooza going to actually matter and bring flows, or is it just going to be a whole bunch of announcements and not a ton of demand?
Oh, it's a great question. I think the right way to think about ETPs is not that they bring flows, it's that they amplify flows. So in retrospect, looking back at the Ethereum launch, why did they not bring flows into ETH? Well, literally no one wanted to buy ETH between July and whatever, maybe for about a year, right? For the first year that they were in the market until maybe April 15th or May 1st of this year. That's when ETH got its momentum back. We had reorgs at Treasury, we had new technical advances, and we had the stablecoin trade. So what that tells you is they don't bring flows on their own. You can't launch a Bitcoin Cash ETF and suddenly we're all talking about eCash again, right? That's not going to happen. But if a asset has a good story and a good reason for flows, then the ETFs are like a super highway that let traditional investors pile in alongside retail investors. So I think it's going to be pick and choose them, right? Do I think Solana will get flows? I absolutely think Solana will get flows. Do I think Chainlink will get flows? I think Ryan is right, but early. I think the narrative will roll onto Chainlink after people digest Ethereum and Solana. Would Hype get flows? I think Hype would get flows. Will Litecoin ETPs get flows? Boy, I would be surprised. So think of them as a flow amplifier and not a way of inciting flows. That's the right way to think of these ETPs. So there'll be winners and losers. But it's good to have them because it does make the flows flow faster when people are excited about an asset.
There's also, for what it's worth, if you look at the first few months of the Ethereum ETP flows, there was just net outflows, which is a strange thing considering this is a new ETP that launched. But the reason, of course, that occurred is because you had all of these assets that have been in these OTCQX traded trusts. I forget the ticker for Grayscales, but of course, it's like GBTC phenomenon, right? Where you had these investors who have been locked up and these publicly traded tickers have been trading at a discount. And so once that discount closes, they decide they want to exit the market and kind of take their capital back. There's also hedge funds that are in those trades for those reasons and whatnot. So I don't think because not as many of those exist for these other assets, and they certainly aren't as large as the Bitcoin and Ethereum trusts were, I don't think that you have that same kind of initial selling pressure. But I agree with Matt. I think the flows will be varied across different assets from the amount and the timing. And net, it's just positive for investors that we now have these ETPs available for them to allocate when and if they decide to have that exposure in their portfolio.
Yeah, well, I agree with that. One thing that occurred to me, which maybe should influence his Bitwise product strategy, that's why I do these calls with Ryan, is the way they can incentivize flows if they make it easier. So as an example, right now, everyone wants to invest in stablecoins and tokenization. It's a hop to get to Ethereum and Solana, which TradFi will pronounce Solana or whatever. But if you have a stablecoin and tokenization ETP, or you have a thematic ETP, then it becomes easy. I want to invest in stablecoins. I Google stablecoin in Charles Schwab and up peps this. I do think that can incentivize flows. So maybe the index thematic strategies will drive flows in a way that the individual crypto assets will not.
It's so true, because I have the texts that I have gotten have either been about how to invest in Bitcoin or how to invest in stablecoins. That is the questions I have gotten from outside. Nobody asks me how to invest in tokenization. They don't even know what that means for the most part. And nobody asks me, I mean, unless they're like tuned in a little bit. They don't generally ask about other specific assets. To be honest, they might ask about XRP. That's probably the only other one that they ask about, because the XRP army is so freaking loud on socials and everywhere. It's insane. And XRP to 10,000 makes zero sense. But for whatever reason, there's like thousands of influencers who post it every day. It's insane.
That is very true. Well, I'll add one more thing about ETF flows, which maybe people in crypto don't understand. It doesn't matter how many people dislike an asset. So if you take the median opinion of XRP in the crypto community, it's probably negative. That does not matter for flows. The only thing that matters is, are there people that really like the asset? Because the people who dislike it just don't buy it. But if there are people who like it, that's better than having a sort of meh reaction, like an asset that everyone's like, oh, the umpteenth layer one, meh. I'd rather have people who love an asset and hate an asset. That's actually good for flows. So XRP is an example where, of course, there'll be flows because there is the XRP 10,000 people, and they're all going to want to buy. That may be, I think, misunderstood by the market a little.
That's a very good take. Okay, I want to, just while we're on ETFs, any expectations that you guys have around, like, maybe not the newer ones, but like Bitcoin ETF, Ethereum ETF? Do you guys think about projections of how much flows you think they could get for the rest of this year?
Oh, for the rest of this year, we think Bitcoin ETFs will set a record for flows in Q4, and that total 2025 flows will be above 2024 flows. They haven't been on pace for that until October, but we've seen flows significantly accelerate. And I think we'll end up with $35 or $40 billion. My bigger, hotter take on Bitcoin ETFs is I think eventually that'll be $1 trillion market. So right now it's about 200 billion. I think we're going to wake up in a couple years and there'll be $1 trillion in Bitcoin ETFs. Part of that is that I think the price of Bitcoin will go up. And then part of it is institutions still by and large don't own that much, right? It's still 75% owned by retail. I think it'll be 75% owned by institutional. So inflows, price appreciation, we'll have $1 trillion in Bitcoin ETFs within a few years. And I think that'll be exciting.
Yeah, and that's a huge number for what it's worth. Today, the ETP market is about 17 trillion globally, and it's growing at a pretty strong clip, something like 20% per year for the past 10 years. So investors love ETPs. They love the fact that you can now access Bitcoin, Ethereum, and soon other assets in ETPs. And so when you think about the fact that we just have this continual bid for ETPs from institutional investors, whether it's in things like 401ks or model portfolios, or for things like the basis trade, I think that you continue to see the assets in Bitcoin ETPs and others climb. And as Matt mentioned, once they get to 1 trillion or more, they will probably be something like 5% of the ETP market, which is really incredible for an asset that's only been around for 15 years.
Yeah.
Let's go.
I toss in just one more fun fact for you, Jay. For a long time at Bitwise, our average client allocated after 8 meetings with us, which was painful from a business perspective, but should be helpful from a flow expectation. If they've been doing quarterly meetings with us since the Bitcoin ETF launched, they're just now curing to the point where people may want to allocate. And I think people probably don't understand that. TradFi moves at a much slower rate than crypto investors, but we're just, I think, at that inflection point where we're actually going to see flows accelerate a lot.
Yeah, I would, sorry to keep jumping in. I would just add one more thing there, is that the allocation size that we're seeing is actually much larger today than it was 2 years ago when investors make that initial allocation. So previously, like a 1% allocation was the starting point, and many people didn't go above 1% when they started with their Bitcoin allocations, many of the clients that we worked with. Today, it's something like 3 to 5 times higher than that. It's like 3 or 5%. So these seem like small numbers, but when you think about the acceleration of the size of the bid from 1% to 3% to 5%, and the amount of clients that are now doing that, that starts to have a meaningful impact on flows into these products.
It's an exciting time, gentlemen. Thank you for trying to decipher a long tweet from Trump to start the episode, and for giving us the bullish vibes that you guys always bring to the show. Really appreciate you guys joining us today.
Yeah, thanks for having us. This was fun.
Can't wait to be back. Thanks.
Thanks as always for listening in, folks. Got to remind you, none of today's episode is financial advice. If you need any investment advice, you speak to a professional. Today's episode is for educational and informational purposes only. Have a wicked awesome day, everybody. See you back again next week. We're sending Kyle Reidhead, our head of research, to the UK's largest Web3 summit. I'm talking about Zebu Live, happening October 21st and 22nd in London. Want to join? Use our code MILK to get 20% off your tickets. Hit the link in the show notes and say hi to Kyle for us. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.